So, welcome everyone to today's webinar on Banking a New Generation, Developing Responsible Retail Banking Products for Children and Youth. My name is Bram Stoppelen. I am actually Financial Inclusion Manager at Child and Youth Finance International. I'm noticing here. And with me today is Anna Zangi, Youth Segment Lead at MasterCard.
Hi everyone. Sorry about that. I wasn't sure whether you could all hear me. Yes, as Bram said, I'm Youth Segment Lead at MasterCard. Very happy to share the next hour with you going through this exciting new joint initiative.
Thank you. Once more, a little question to people in the audience to mute your microphones just to avoid echo. If you have burning questions for clarification, please make a little note via the chat, and we can get into that. And if clarification is needed, then we'll ask you to speak up via the microphone. How the webinar will work is that for the next probably 35 minutes or so, we'll be doing our presentation, and then there'll be space for some final questions. And you know, if there are particular longer questions, we can see if there are ways for us to follow up after the webinar with that. I just wanted to start with a short introduction as to the timing of this particular event. Today is the last day of Global Money Week, a major event which has happened for the third time now. And during Global Money Week, organizations all around the world try to raise awareness for children and youth on their financial inclusion and financial education. And this involves central banks, banking associations, ministries of education and finance, NGOs around the whole world, academic institutions, media and corporations, and lots of other entities and individuals all around the world trying to celebrate this topic and put it on the national and global agenda. And this year has been unrivaled. We already have counted more than 2 million children and youth engaged in over 115 countries. So very exciting. And today is the closing. After this, actually in Paris, the stock exchange bell will be rung. So we're excited about that. And as part of this week, we have launched together with our global partner MasterCard a new guide on the developing of responsible retail banking products for children and youth, and that's what we're presenting on today. So presenting will be ourselves, Anna and myself. We are both working on the global partnership between our two organizations. And you know, I think it's quite exciting to see the support of you know, the leadership of our organizations. Anna, maybe you want to start on this.
Yes, thank you, Bram. I think Ajay Banga, the President and Chief Executive Officer of MasterCard, sees this as a really important part of MasterCard's financial inclusion effort. And as you can see from the slide, his quote is, "Every child and youth has a right to safe, accessible financial services, and we need to empower them to grow into productive economic citizens." And really for us, it's about how can we look at our products, at our services, and make them more child and youth friendly. And it can go beyond that, and you'll see as we go through the guide, that's the intention, in fact, of the guide, is to start getting the sector to thinking about areas in which they can become more child and youth friendly.
Yeah, thank you. And, you know, on our end, Director Giroux expresses, you know, the central focus on youth and employment. Often when we talk about financial inclusion, there is the risk of looking at that as an instrument in and of itself. Now, while it's very important, we think it's very important also to emphasize the relationship it has with employment. These days, financial connectedness is so essential to obtain a job, to have healthcare, to have access to payment facilities, and all of those, both in terms of having the actual job as well as in the build-up to it, are absolutely essential. And so to create economically productive citizens and to work against unemployment, it's really important that relevant and responsible financial services for children and youth are developed. So that's why Child and Youth Finance invests in this. And together with MasterCard, we have launched in January a global strategic partnership between our two organizations. And this guide is the first result of that. So just introducing the structure of the presentation as well as of the guide. We follow the three parts that the guide has, and we'll start with the guiding principles for responsible financial products for children and youth, looking at a framework for children's rights and business principles developed by UNICEF, Save the Children, and Global Compact. And then shortly talking about the child and youth-friendly banking product principles developed by Child and Youth Finance and its global network. And secondly, we'll talk about why financial institutions should invest in children and youth, partly social responsibility, but also return on investment and other dimensions. And looking also at children and youth of the 21st century and some themes and some trends that are important to take note of. Anna?
Yeah, in fact, one point to be stressed is that the guide is made up of three parts. So Bram has talked you through what is the key components of the first part. The second part of the guide really focuses on the product side, which is what makes a good child and youth-friendly banking product. So what are the components of that? And in today's discussion, we just obviously don't have the time to go through everything, but we'll touch on some of the brief highlights and frameworks that we've added in to help financial institutions start thinking about that. And then also in Chapter 5, a really important part, thinking about how to integrate children and youth much more actively in the product development process in a responsible way, but getting their voice heard. They are key stakeholders in the process. The last part, in fact, of the guide touches on case studies, 5 particular organizations that are showcased in the guide. So that is the structure. Brian.
Thank you. So to move to part 1, why should children and youth be banked? Particularly focusing on the guiding principles. Now, I hope this slide is well visible to everyone. By the way, in the announcement to this webinar, there was also the link to the actual guide. So if you have the possibility to have that open, you can actually see it there in great resolution. What is sort of the background of this guide is some basic underlying principles of the empowerment of children and youth. Their basic rights, on the one hand, to be protected, and on the other hand, to be supported in their economic rights and development, which in a very structural way sort of underlies also their social development and other kinds of development. Now, over the past year or two, UNICEF, Global Compact, and Save the Children have worked together on the development of the children's rights and business principles. And these are sort of a holistic principles, a holistic set of principles looking at an actual sort of working set for financial institutions and more broadly, corporations working on issues that relate to the lives of children and youth. And there's a range of different principles, the most overarching one being number one, meet their responsibility to respect children's rights and commit to supporting the human rights of children. The children's rights and business principles are rather broad, but the value that it gives is that as a larger organization, as part of the overall strategy and the overall business principles that your organization subscribes to, it can easily be integrated. And if you look at the various dimensions, principle number 2, looking at child protection and the elimination of child labor, number 4, and just scrolling through this. Number 4, looking at the protection and safety of children in all business activities and facilities. The safety of products and services, number 5. Marketing and advertising that respect and support children's rights, number 6. Some of those are rather relevant when we're talking about product development and product being part of a wider wrapping of services and activities that children and youth engage with. So in the guide, we give a bit of background on these principles, as well as encourage financial institutions to consider embracing these. Then, in perhaps a bit more detail and looking specifically at banking products, Child and Youth Finance International over the past 2.5 years has worked with a variety of stakeholders around the globe on principles for child and youth-friendly banking products. We have a guide, another guide called Obtaining the Certificate for Child and Youth-Friendly Banking Products. But more importantly, if we look at the overall principles, there have been 8 that have been defined. And you can read in more detail in this guide, as well as in the certification guide, about these principles. I'll just give them in bird's view. Availability and accessibility for children and youth. We talk about banking products. We believe it's important that they are effectively available to children and youth, regardless of age, of gender, of religion, and of economic situation. We believe it's important that there's maximum control for children and youth, meaning they have the ability to operate and to actually own the account. Because with empowerment also comes responsibility. Positive financial incentive for children and youth. Children and youth are a vulnerable segment, and very often a bank account is the first point of interaction with the formal financial system. And it was widely felt by the stakeholders we engaged with, which included a range of players in the financial sector as well, that it be very important that this is a positive financial experience. So a positive financial incentive. Number 4, reaching unbanked children and youth from the perspective that financial institutions have a possibility to reach out also to those communities where people are not yet banked, and children and youth in particular also within families have access to financial services. So this principle looks at a proactive outreach to those children and youth in particular. Child and youth friendly communication strategies. Maybe very straightforward, but actual communication that sort of addresses the needs and the realities of children and youth in particular is turns out to be tougher than it seems. And So looking at child-centered communication approaches, for instance, terms and conditions that are easily understandable and reduced to just one page, are the kinds of things we're looking at here. Number 6, the component of economic citizenship education. Importantly, financial inclusion really only becomes whole if it is connected to an element of understanding of the financial service. Yet at the same time also understanding why you would need to be dealing with money in the first place. And economic citizenship education, in a way, is financial education combined with social or life skills education and an element of livelihoods education, more connecting to the labor market as well as to an element of entrepreneurship. Number 7 is monitoring of child and youth satisfaction, which really looks at, is the product effective? Are the services reacting to the needs and the interests of children and youth? And finally, internal control. Does the financial institution have the processes in place to monitor its own practices on these 7 points that were just mentioned already? So that's bird's eye view the 8 principles for child and youth friendly banking services.
Yeah, so picking up from there, what can a financial institution do? On the screen we've got a mini checklist, but certainly, really I think becoming aware and familiarizing oneself with these 2 frameworks is very valuable for product development managers, because what we've realized is that being child and youth friendly stretches beyond just a CSR initiative. There are ways to really, as Bram pointed out, look at product development and design with a child and youth friendly mindset. And these frameworks are very valuable in getting financial institutions to start thinking about how and what they can do differently. So not only involving these stakeholders more in the process, but also thinking about terms and conditions that are much simpler, 1 page long, thinking about opening balances, which sometimes can limit access depending on geographies, safety and security, privacy. There's lots of different elements that play a key role for this particular segment. So I think that using these frameworks is very valuable. Familiarizing oneself and using these frameworks is very useful. I think that getting to understand the CYFI movement, even for our organization, has been really valuable to start navigating this space. And then also start looking at the child and youth friendliness of our organizations, from a 360-degree point of view. One example, as we started in MasterCard looking at this internally, we realized that MasterCard was doing quite a lot in the coalition against the commercialization of child pornography. There are a lot of initiatives that financial institutions can get involved in that support and respect child's rights beyond just the most obvious. So I think that the frameworks are a very valuable place to start.
Thanks, Anna. So to move on, why invest in children and youth? We believe there's various ways and various reasons to invest in children and youth. One is basic social responsibility. Financial inclusion, as discussed at the start, is really key in terms of lowering unemployment. More academic work in this space is slowly moving forward, but there's a lot of anecdotal evidence available. Now, financial inclusion doesn't just come with financial access, but it also needs consumer protection and financial literacy on top of it. Not just any bank account is going to do the trick when children and youth actually don't know how to use it, or there might be some lesser favorable conditions, and they don't know how to weigh it against one another. So from the perspective of the financial institution, there is a real possibility, to take a social responsibility and answer to that need and interest of children and youth. We have looked in 2013 because we've been talking about these principles for a while, but then we wanted to know what is actually going on, and so we went online and we looked at various children's and youth products that are offered around the globe, and we looked at sort of teenage bank accounts of 135 banks across 5 regions. And we assessed which of the 8 principles that I just presented to you were fulfilled in these accounts. And while still a relatively high number of 70% of the products is available and accessible for children and youth, at least upon checking online, that number drops relatively quickly as we look through the other if we look through the other principles. Maximum control to children and youth. Ownership is very much the question. Operating is much less. Of course, here is an important point. To which extent does national policy actually allow this? But a proactive outreach strategy to unbanked children and youth, we've hardly seen that. And child and youth-centered communication. We saw that in a very small part, 25 or 27% of cases. So in terms of the possibility to sort of as a financial institution look at your financial inclusion offering from a social responsibility point of view, there's a lot of space to move forward. Anna? Or actually, I think this was my slide to do as well. We looked a little bit at as well the social responsibility and sustainability sort of strategies and approaches at these 135 financial institutions around the globe, and we saw a wide range of focus on children and youth. It ranged from sort of a baseline approach of signing up to the children's rights and sort of the banking principles, and sort of considering children and youth in the product development process, to rather superficial, where there's a stated commitment towards children and youth, but if you look at the educational dimension, it's really nothing much of substance, and it doesn't look at the product offering at all. With MasterCard, we've also been looking at, what could it look like if you had a 360-degree commitment, as Anna said before, and then you could look at fully integrating, the educational dimension with the inclusion dimension, having such thing as, a cross-sector collaboration with an NGO on an economic citizenship education program, making children and youth key to the brand, and offering child and youth-friendly banking products. And we've seen 1 or 2 cases of banks that have successfully sort of embraced these things. You can think of Haas Bank in Mongolia. Anna?
Yeah, the next slide really starts looking at profitability and return of investment of this segment. And if you look at figure 2, you can certainly see that in the early ages, young consumers are not necessarily all that profitable for financial institutions, naturally, because they have a limited product set. As they evolve in age and consumers take on a variety of products, they obviously become more profitable. So we do see that this particular segment is not a short-term investment, but financial institutions need to take a longer-term view. They need to look over the lifetime of the consumer in order to look at the return on investment. Now, the work we've done, clearly, when we look at the net present value over the lifetime of consumers, taking into consideration retention rates and the time value of money, we see in figure 3 that actually probably around it's your 30-year-olds that are your most profitable consumers. But we all know that the cost of acquisition at that age is much, much higher than it is for a teen and for a young consumer. So, however, when you look at how to create the greatest or highest shareholder value, really what makes the most sense is acquiring customers as early as possible, because while the highest NPV is at 30, the cost of acquisition makes it not as worthwhile as it is for recruiting consumers when in their teen years, where you can really, provided, of course, you actually retain them. So we'll go into that in one of the subsequent slides, is that what is important is bringing them on board, but also making sure that you evolve and meet their changing needs as they go through different life stages. So I think that that's really an important point to consider, that the cost of acquisition is a very important variable. Bram?
Yeah, just to add to that, quite a bit of work has been working in terms of looking at the business case, but more with financial institutions operating youth savings programs in mostly developing economies. And some interesting work has come up there in terms of the possibility of cost saving as well, so as to make the shorter-term engagement with this segment one that can become more financially sustainable as well. We don't go in great depth with that in the guide, but we do want to invite financial institutions to actually look at that into a bit more depth. There's a very interesting article from the Gates Foundation looking at the potential cost-saving ways and efficiencies in offering to low-income and lower asset segments, as well as from the Youth Start program.
Bram, to add to that, I think the way technology has been evolving so quickly, technology also is going to provide, be a key way of actually diminishing costs. And I think that the Gates Foundation goes into the role of technology in reducing costs and addressing this segment. So, right. So, moving on. In fact, I was referencing this earlier. You'll see from here that clearly, when we say children and youth, there are multiple subsegments with different needs within that youth, 0 to 24 years of age. Pre-scholars, elementary scholars, early teens, which really from 0 to 14 are very dependent, are dependent on their family financially. Then in the early teens, depending on which geographies, there is maybe more shared responsibility in terms of financial independence. They may start, getting a part-time job, or in fact may get a job depending on where they are, and then moving into the young adult space. And what we've tried to do is map within those subsegments some of the key milestone financial milestones that they go through. And these are really important for financial institutions to consider as they look at developing responsible and child-friendly products, because ultimately product development must start with the needs of the consumer. But then, as you see with this segment, it is very much a journey, a journey that evolves. And what is critical is to make sure that the products that are offered do evolve to meet the constantly changing needs of this particular group.
Yeah, and if you look at the whole line, of course, no single person's life checks all these boxes, but we've kind of created this hybrid, you know, child and youth here with elements from around the world, and in a way it you know, represents the argument that as a financial institution, or for that matter any corporate engaging with children and youth, it really pays off both from the responsibility side as well as from the corporate side to actually you know, really understand what's happening in these lives, and the reality, you know, in lots of developing economies, but also in economically developed countries, is that you know, the interaction with finance starts at a very early age. Popping up with mobile phone, of course, right now in the news there is the case about Apple and popping up within apps, etc. So from an early age these things start, and then it develops. So I think this overview is really sort of to show the vibrant economic life of children and youth throughout their development.
I think an important point to add there too, Bram, is just that once again we were speaking about the role of technology and how, in fact, while products may be appropriate in one geography and culture, they may not be appropriate in another. But yet what we are seeing is technology also provides the opportunity to leapfrog certain types of products, and we see that in, you know, developed versus developing. This is an interesting slide, in fact, goes into some of the key implications. And when developing the guide, one of the things that we kept coming back to was this tension between two, in anything related to children and youth. On the one hand, you know, wanting to make sure that children and youth are protected, but on the other hand, wanting to make sure that they have the appropriate level of autonomy to allow them to experience and learn and to actually grow. And here we take a couple of arguments further.
Yeah,
Bram,
and I think
you were going to start, right?
Yeah, what I think is fun is you see the creative tension here that, you know, as you go, and we of course bring various perspectives to the table, you know, some of these points really came forward. So, you know, on the one hand, there's a real key need and opportunity to leverage internet and mobile technology to develop appealing products and to lower the, you know, the actual costs that are there. But, Anna.
Yeah, but at the same time, you know, you want to make sure that you providing accessibility and making your products available also to those that are less disadvantaged and maybe don't have the same access to technology.
Yeah, and sort of in the interest of time, skipping one or two, but using brands and partnerships that are relevant and have high potential. Yeah,
and you know, on the marketing side, while it's important, and we all agree that I think financial service products must also be exciting for children to use. There must be a fun element to it. We mustn't let the emotional needs side of it overshadow that there are certain basics that we still need to respect, like fair terms and pricing and transparency and authenticity.
Yeah. And so what we've really been trying to do here is indicate those multiple sides to the story, and we really hope that the product development teams within financial institutions are inspired by that as well, and put those arguments on the table during that development process. Yeah, there were some key themes I think to consider when entering with this segment. Anna?
Yeah, definitely, and I think you hinted at that in the slide with the milestones, but really you know, this generation or these generations are growing up in a digital age where they're exposed to a lot more technology a lot earlier, and maybe not every market, you know, has has smartphones, but most of them have some level of mobile phone. And we certainly see that technology is giving children and youth global reach and enabling them to connect and be connected on an unprecedented scale, and at the same time also allowing them to be parts of communities which previously, for previous generations of youth, were not possible because we were limited by geography. So growing up in a digital age does mean that they're exposed to a lot more, a lot earlier. And Bram, you mentioned the example of, you know, buying within apps. I think that children are being confronted at a younger and younger age with payment and buying type decisions. So it is important that we ensure that that when they make those decisions, they do so with some level of education and support, right?
Yeah.
Going on to parental responsibility.
Well, exactly, because if you look at the parental responsibility, it's a very interesting one. You know, you have children's rights to participation, but also their right to protection. And we sometimes see that the emphasis on protection is that much that effective participation is not made possible, whereas reality is different. On the other hand, if the right to participation is drawn that to that extreme, you know, that everything is possible, then obviously, you know, this vulnerable segment, you know, runs the risk of being engaged in certain economic transactions that they might regret. So, in the design of products, the balancing this participation with protection, of course, within, you know, the context of national policy, national law. But still, we find that there's still possibility to maneuver here in terms of, you know, do parents truly need a check on every single transaction, or is there another way to monitor? And this is something that can actually be done sort of through co-creation with, you know, customers or consumers. So this is something that is not set in stone, yet carries, you know, sort of important dimensions that product developers can think about. Then the external factors.
Sorry, that's you.
Yeah. So you know, on unemployment, we've already mentioned it, but you know, reality right now is that there is already rather high, you know, unemployment, and there is a possibility for financial institutions to actually have targeted programs that look at, you know, financial inclusion as well, and getting those youth sort of back in, more economically aware, more economically included, and hopefully thus also creating some possibilities to connect to the, you know, labor markets, or facilitate the setup of their own small businesses when we're talking about youth. Anna?
Yeah, also I think another key thing to consider is this shift from cash to electronic payments, and while it's happening more quickly in some markets than others, there is a secular shift globally. You know, there are markets, for example, in the Nordics, where in fact cash is being eliminated from the system, and you've got cities that try and, you know, become cash free. For fraud and for other reasons. And so children at a much younger age are needing to have some kind of payment vehicle to pay for lunch at school, for transit, etc. So, you know, it does vary, but we are seeing it even in markets like Kenya, where more and more universities and different players are issuing prepaid cards from a safety point of view, and also they can tie in the financial education piece and encourage smarter money management from an earlier age. The last point was really the rise in social networking, and I think we've alluded to that already. And this, while the social networks are a really positive thing, one needs to also be very careful around privacy practices and make sure that the segment is adequately protected and know, you know, the golden rules on how to manage their money and be careful in the social space.
Thanks, Anna.
So now we're moving into part 2, right, Bron?
That's right. So developing an actual program for children and youth. We've structured that part 2 of the guide in 2 chapters. One looking at what makes a good child and youth-friendly product proposition, and secondly, sort of integrating that with the actual product development process. So to start with the first one, it was in November last year that Child and Youth Finance organized a meeting at the European Central Bank. By the way, this morning there was a VIP chat with children and youth asking questions to the global communications director of the ECB, the European Central Bank. This was a follow-up to the meeting we had in November. And at this meeting, there were recommendations that were being done by children and youth regarding, you know, product design. And according to these youth representatives who had actually consulted thousands of children and youth online also during the course of those days of the meeting, thought that every child and youth should have access to a child and youth-friendly bank account above the age of 12. That these child and youth accounts should come without fees, that the contract language should be child and youth-friendly, and it should all fit within a maximum of 1 page, that there should be no overdrafts allowed, that the bank accounts should be certified child and youth-friendly, and no transfer fees in the EU. Now, obviously, this is EU-focused because this was directed to the President of the European Central Bank. They also indicated the importance of having a quiz or a test before opening the account and providing easy access for children and young people, you know, either online or physically. The use of technology, because, you know, children and youth are early adapters, and outreach to schools and alternative channels of distribution, such as libraries and sport clubs, and looking for original ways to actually reach out there. Anna, I think, yeah.
Yeah, in fact, and I know we don't have much time, so I'm going to try and speed up, but Bram and I get very passionate about these, the work. I think that what's really important in any product development process is starting out with the needs of the consumer. And here what we've identified or we've outlined, and you'll see it in the guide, is the requirements as per those that you've heard from the youth themselves, as well as what we found in some of the principles, overlaid against the basic needs and wants as well. So we've spoken about access, you know, access to the ability to open an account, both physically and non, accessed by appropriate channels that are safe with simple terms and conditions. The control piece is important, that they be able to make deposits, withdrawals, balance inquiries, you know, and autonomously be able to control the account, that there should be positive financial incentive in running the account. So, you know, no hidden fees, you know, competitive rates, etc. As Bram said, no overdrafts. From a security point of view, being able to feel their money is safe, it's protected from fraud, and they're adequately protected from a privacy point of view. And then, and in the financial industry, we call it financial education, but I've learned from Bram that we refer to it as economic citizenship education, which is actually financial education within, life skills. It's just in a broader context, which is really important. So those are really important basic requirements. And when you translate those into needs, a lot of the work that we've done across the world really talks about that basic needs. On the one hand, peace of mind, speed and ease, freedom, control, and then also those more emotional, fun needs around, something that can allow them a degree of self-expression, where they can get some level of recognition and they believe they are part of a community. So those are the needs to take and requirements to take into consideration in the start of a product development process.
I think what we're trying to say also is that, ideally, a product or sort of a programmatic approach will look at these various dimensions and not just focus on just the wants, but also look at the basic needs. Not just look at security, but also at the control and access part. So, it's sort of the balance that we, suggest you take into consideration.
What we've done on the next slide, you'll see it's a diagram that just tries to simplify what are the components of a child and youth-friendly product proposition. And you'll have time when you read the guide to go through it, but really at the core of it is a core account, be it a current account, a savings account, or some type of prepaid card needs to form the basis. And then around that, when each different element, each different component needs to be considered from a child and youth perspective. So firstly, safety, security, privacy, the legal implications and the risk considerations, the accessibility, so seamless access through different channels and a mix of channels, be it branch or ATM or point of sale or online or mobile. And within those, thinking through the child and youth aspects, any additional benefits and services that are provided. And throughout the guide, we've tried to build in checklists against each of these for product development managers to keep in mind, some of the guidelines here. Marketing and the communications outreach. Also, the next one, the end-to-end child-friendly practices, procedures, and interfaces. As children and youth interface with your financial institution, are people in those interface positions used to and know how to deal with a child versus an adult, be it on a helpline, a call center, or at the, at the teller or in a branch. So the interfaces are important. And then lastly, and very, very importantly, is that economic citizen education. So when looking at a product for children and youth, the financial education and economic citizenship education is an important key component, as important as the whole packaging. So I am going quickly, so because I am aware of time.
Well, it is a feature of the guide. We all invite you to read it, and we hope that this just gets you curious as well. A daunting slide now, if we look at the continued on the basic product construct, looking at savings, current and payment accounts, and cards. I will spare you the detail at this point, but what we've been trying to do is sort of look at the ways, the specific dimensions that are relevant to the most basic level design of products, looking at both the account as well as the card dimension. And so we invite you to go through that in more detail in the guide. But this is basically an elaboration of the framework that Anna just showed on the needs and wants and sort of the basic necessities in combination with the principles for child and youth-friendly banking product services. And, we've been trying to work, together on not just throwing a set of principles out there in the world, but also really trying to bring them back to the reality of actual financial services.
Yeah, and this is an example of the kind of checklist we have in the guide that goes with every component of the, those components we've just been through. So on the marketing and communications outreach side, we keep reminding the product development people that are working with the guide, is the product you're developing, is it age or gender appropriate in terms of the marketing you have in mind? Are the elements of the program authentic? And I've mentioned authentic before, but it is a really important thing because especially with these generation of children and youth, authenticity is really important. Don't pretend to be what you're not. Transparency is key. So keep it, or be authentic, keep it simple to understand and transparent. Be careful that you're not exerting undue influence directly or indirectly through certain marketing practices or spokespersons you use and so on. So one does need to think through every little element of it. Is the language simple and straightforward? Also, in terms of additional services, in the guide you'll see we've gone into a level of detail, giving you some examples of, against each need, what are the kind of features and benefits and functionalities that could be considered to be built into a product. Bram, I'm done with that one.
Yeah, and then finally, of course, yeah, we are going through it quite fast, but one thing we wanted to highlight was sort of this framework of economic citizenship education. In fact, Anna was saying that, I told her to reconsider the term of financial education only. Well, as Child and Youth Finance, we've been trying to work on this by sort of looking at a slightly, perhaps more holistic approach towards the education side, looking not just at sort of the math-focused financial education dimension, but also at social and life skills education, as well as livelihoods education. And we've been working with the likes of OECD, UNICEF, and UNESCO on identifying sort of key competencies around this. And this is something that, financial institutions could also very much benefit from. If, consumers are more aware of the realities of their own lives, they can proactively shape their own lives and ultimately become more productive economic citizens as well. And so that requires an interrelationship between an understanding of their needs and wants themselves, which is more social / livelihoods education oriented, but also looking more on the connection to the labor market and employment, looking at entrepreneurship as well. And so we already see that several banks have commenced work in one or two of these frameworks together, but we really urge them to think about the interrelation between all these three pillars. And in the guide you'll find more detail on this. Finally, on this, the delivery. Sorry, and one more thing. Just on the delivery model, there's obviously the possibility that in the public eye, if financial education is delivered by financial institutions directly, there might be a marketing dimension to this, despite, say, the best efforts, even not to. And so, if you look at models for actual delivery, there's a variety of possibilities. In the UK with PFAG, I think I saw PFAG on the call as well. See some, great example of how an NGO works with both public and private parties and does independent certification of financial professionals. Because, educating about finance is not just about finance, it's also about didactical skills and educational skills. So, looking at various models of delivery can really pay off to move the agenda forward on this. Now, finally, integration into the product development process. And I'm looking at the time and still enabling people to, you know, have the time to comment. Maybe let's go really fast on this one.
Yeah, no, I think that this one really, every financial institution has their own product development process. This is just a generic process, but what we've tried to do is call out places where children and youth can be more integrated as stakeholders and their opinion, you know, got in terms of the product development process. And it's not just at the end or the beginning. You can get them involved throughout. Obviously, you do need to be aware that there are obviously ethics, and there's an SMR code of conduct when conducting research with children, involvement of parents, etc. But it is valuable to ensure you give children a voice throughout the process, in not only to make your product more successful and responsible. So, Bram?
Great, thank you.
Yeah.
Yeah, so we just wanted to highlight the fact that we also felt it was really important to highlight some cases. Now, throughout the guide, we highlight and feature in short case studies some examples of you know, financial institutions around the globe that have done some interesting things, and there are a few cases of financial services that we have profiled in more detail at the end of the guide and also referenced in the rest of it. And these 5 banks, Commonwealth Bank Australia, OCBC Bank in Singapore, ING Bank in the Netherlands, Intesa San Paolo in Italy, and Rabobank in the Netherlands, we feel have some really interesting facets to their you know, products, some of which we consider to be really child and youth friendly. And so we're excited that they've collaborated with that, and we really urge you to have a, you know, closer look at how they have found some solutions. Yeah, as we go forward, we hope to be able to also in future versions of this guide to include financial services where the, you know, financial institution has sort of formally, you know, expressed the embracing of these various principle frameworks that we have mentioned before. Now, we wanted to wrap up with some final thoughts and considerations. But given time and given that we are already sort of past, you know, the hour, but because we started a few minutes late, we just wanted to open it up for questions and see if a couple of those that we mentioned here on this slide might perhaps already be answered through those. So please, yeah, if you have a question, please unmute your microphone and just speak up. Would be nice if you maybe mentioned your name as well as your organization. Yeah, don't be shy, people. It's you know, asking a question to a whole group is always challenging. I think, you know, teachers in massive classes, when they ask you know, the whole group, mostly no one speaks up, but that's not because they don't find it interesting. Maybe one thing we could discuss, you know, of course, we have worked together, you know, MasterCard and Felmy with Finance, and you know, this kind of partnership is it has its challenges. It has great opportunities, but it has challenges as well. And in a way, it shows the microcosm of the kinds of challenges that a financial institution might have, you know, working with an NGO as well. For instance, in looking at the offering of a child and youth-friendly overall program offering. So Anna, I was just wondering, maybe you could share one or two of the challenges that you have experienced in collaborating.
I think that there's been some real aha moments for us. I think that for us it was all about protecting the child and ensuring that, parental controls are in place as much as possible and, up to the legal age and so on. And I think that engaging with an organization like CYFI and some of its members, we realize, that there's the other whole piece, which is the autonomy of the child and giving children the space and room as well to make some of their own financial decisions. So there were some very interesting discussions, and I think very valuable to understand. I think that clearly in our discussion about those creative tensions, we realized that it's a new field, and that in many instances there isn't a right or wrong answer, but that, I think that working together, across private-public partnerships like this, we really can also just start moving this whole area forward to make sure that children and youth are getting access and responsible access and good products.
Yeah, thanks. Yeah, you were saying a new field. Indeed, if you look at what is out there mostly in terms of looking at scalable, sustainable financial services for children and youth, I think a lot of work has been done by the likes of MasterCard Foundation, the Citi Foundation, and a wide range of organizations that have been looking at pilot programs. The Youth Safe, Youth Start groups, the microfinance opportunities, Women's World Banking making sense. There's a range of groups working on this. Women's World Banking has brought out a guide called Banking on Youth, looking at program development for low-income youth, by financial service providers, and where we hope that this current guide actually adds is looking at the larger financial institutions with substantive outreach, and with the possibility to combine the offering of products, also with the dimension of education, and look more thoroughly at its branding and so on. So we really hope, looking forward, that financial institutions will want to work with both of our organizations in terms of driving this agenda forward, and we invite all of you to to think about that and to approach us if this is of your interest. Anna, what are your hopes with regard to sort of the follow-up on this guide?
Honestly, I think that it's really an initial document to start getting the conversation going in the industry about the importance of this particular segment and how we can be more creative in addressing their needs. So we're very, very excited to be partnering with you and the movement in opening this discussion, and hopefully there will be a lot of our customers interested in, in digging deeper in some of these areas.
Anna, we have a question from Asu in Turkey, saying, in Turkey, the age to open an account is 18 years old. Financial institutions have saving products for parents that save for their children. Is there, or could you provide any empirical evidence on why children or youth should have control in their own accounts? This might enable us to work closer with the regulators and policymakers. Anna, you want to have a first stab?
You start, I'll join you.
So there is some evidence available, mostly in developing economies, that could be shared. And what you see is, sort of some of the themes that you see is active uptake of accounts, active savings behavior. And it's particularly actually in the market research that you see some very interesting things. You see very strong arguments as to why parents should not always be involved with their children's accounts. That, in fact, while this may happen from the perspective of protection, it ends up having the opposite effect, because you know, the savings on children's accounts are being used in private situations in the household or for purposes that children or youth have never agreed on. So it's those kinds of findings from the Youth Save and Youth Start programs in particular that are very interesting. However, at the same time, I think the strongest argument would come from market research in your own context. So that is definitely something we urge. And in the guide, we also give an overview of you know, market research questions that you could consider when you're having focus group discussions, or maybe reach out with larger sets of surveys. Finally, when it comes to actual state of regulation and collecting that, as Child and Youth Finance, we actively collaborate, or we actively work on building, you know, our intelligence globally around this. So even though we cannot at this point give a complete overview of what is happening on this globally, I would invite you to stay tuned and you know, follow our upcoming publications, because this is something that we will be working on over the ensuing months.
Yeah, I think that it's guides like this that open these kind of discussions and get us as an industry to start thinking about, you know, how the needs are changing, and, you know, do we need to adapt certain regulations in place. And so I think it's a very important part of the whole process. The dialogue that this guide, I hope, will start, and that's a very great example of one of the areas that I think we should start working on together.
Thank you, Anna. Any more questions from the audience? Well, you know, I'm looking at the time, and I realize you're all busy individuals, so I want to thank all of you. First of all, I want to thank Anna for making the time today and to present together with us, as well as MasterCard for, you know, as global partners, having realized this guide. I want to thank as well the banks that have contributed to the actual guide, and the other individuals and organizations that have helped. And I want to thank you for your time today, and you know, hope that you'll still be involved in some shape or way today in Global Money Week, either ringing a bell or tweeting about it. And yeah, we really hope to stay actively engaged with all of you. If you are process of or you know, about to design or redesign a product for financial services, do let us know. We'd be happy to learn about it, or be involved if you think that could be beneficial. So I want to thank you all, and Anna, maybe final word for you.
Yeah, thank you, Bram. I echo everything you've said. You know, if we can be of any assistance, reach out to us as you develop your products, or if you've already got products out there that you think, you know, meets some of the things we've discussed. We'd love to hear about them. And for our strategic partnership, this is the first joint initiative, and we look forward to many more with your movement. Thank you very much.
Thank you very much, and wishing you all happy Global Money Week. All right, thank you, and we'll be closing the webinar in just a few minutes. By the way, the webinar has been recorded, and we will work on getting this online over the next few days and communicating this to all of you. So please stay tuned, as this will also be published on our website. Thank you.
Thank you. Bye-bye.
Thank you.